financial assets like stocks and bonds or real world assets like real estate. So there's a bifurcation. There's Bitcoin and then there's altcoins, and there is real use cases, real utility for some of them. But you're not going to get that deployed until you get that clarity that's required from the government in terms of what the rules are. Because we got to fix the money, that we got to fix the rail system for the world of financial assets and tokenization of America's assets. But the big thing for me is we got to fix the political system. We got to make it fair. You have certain states that could have 45% Democrat, and every representative is a Republican. You have this, or vice versa. It could be 45% Republican, and every representative is a Democrat in the state as a result of these games that they're playing with each other.
One of the biggest miscalculations for 2025 was the sheer volume of whale selling. Scaramucci notes that roughly $4.6 billion in Bitcoin was dumped into the market by large-scale holders throughout the year. This massive sell-off effectively neutralized the record-breaking inflows we saw from the Bitcoin ETFs. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Well, listen, a couple things. You could be an expert and you still get a lot of things wrong. So I'll set the stage for you. I think there was a jailbreak in November of 2024. So whatever you think of Donald Trump, he's pro-crypto. And whatever you think of Joe Biden and Gary Gensler, they are not pro-crypto. Okay, they were really trying to hurt the industry. In some cases, trying to put the industry out of business in the United States, or certainly at least off the shore of the United States. And so one of the more positive things about President Trump is he brought in a team like Paul Atkins, SEC chair, Governor Waller, Chris Waller, Nikki Bowman from the Fed, who are all positive on the world of tokenization and payments, and positive on Bitcoin as a piece of digital property. And they want to get the regulation right and fair for the consumer, the user, and the eventual investor. And so that was a very big bright spot. So when you got the jailbreak, Aaron, we had a nice move up, and then people said, okay, this is great. These tokens are going to 150 to 200,000. That's what we think they're worth. Here are the reasons why. But then a couple of things happened that we did not fully anticipate. Number one is the whale selling. And again, you just have to look at the wallets. There's probably $4.6 billion of whale selling this year into the ETF demand and other retail and potential institutional demand. October 10th was a capitulation. Some of that whale selling happened before October 10th, but you had a leveraged situation in the markets. The president put out a tweet related to rare earth minerals, and it was just that one little tiny spark that caused a blow up in the markets. There was a massive amount of deleveraging. It impacted some of the market makers. It forced a liquidity crisis, a result of which you saw a little bit of an altcoin bear market and a 30% drop, which, by the way, is a garden variety drop in Bitcoin, but it's still a drop that wasn't expected. So we watched that meter between bull and bear. We were tilted to the bulls. We're now decidedly very bearish. I think on a scale of 1 to 100, the bull meter is something like 13 or 14. And so I like that for 2026, because that means the sentiment is so negative that we just get a few positive things going, perhaps a little bit of less whale selling. We'll see a retracing back to the Bitcoin 52-week high. But I got it wrong. I didn't expect that kind of selling this year from the whales. I think, this is another part of the story, but it's more minor, is we would have thought, if you invited me on in December of 24, I would have said we were going to get both pieces of legislation passed by the end of the year. The Stablecoin Act, but then also the Market Structure, the Clarity Act would have also been passed. That didn't happen. So bad news for us. The Democrats still hate crypto. We could pretend otherwise. There's a few that don't, but they've made this thing very partisan. And it's sad to see, because it's against the interests of the investor, the consumer. It's against the interests of people that are transacting in the financial services institution. And the technologies that you and I study are actually technologies that can unleash lots of cost savings into the economy, which then leads to more money and capital being deployed into economic innovation. And so you can chat GBT this, but I've done some homework on this. There's depending on how you measure it, there's $3.5 to $4 trillion worth of transaction verification expenses in the global economy per year. It's credit card fees, wire service fees, admin fees, lawyer fees, and banking fees on doing things with mortgages. If you could get that down, let's say you cut it in half, you can unleash a $2 trillion capital spend in other areas of the economy, or just better wages for people. This happened during Web 1 and the internet in terms of the S-curve explosion of efficiency in the economy. I would like to see that here. And it's hard, frankly, because we haven't gotten it done yet. It's not going to happen by the end of the year. I think we both know that. We've only got 10 days left to go in the year. Could it happen in the first quarter? Maybe. But you've seen the ugly head of Democratic antagonism again related to our industry. I think it is detrimental because I do think there is still a market expectation that it's going to pass. I do think you need that clarity, frankly. It's an interesting, because the act is appropriately named. It's apropos. You got to get it because you want to start that process of tokenization. The name of your show is Altcoin Daily, right? You want those altcoins to move. What are a lot of those altcoins about? They're about use cases. They're about utility. Now, you and I were on the show Killer Whales. We had that one meme coin guy. I was blasting away at that meme coin since we did the show.
Correct.
Yeah, that meme coin is down 80 or 90% because it doesn't have a lot of tangible value. But then there are other coins that you and I know, like Solana or Avalanche or other layer one technologies, Aptos or SUI, that could be used in the process of tokenizing financial assets like stocks and bonds or real world assets like real estate. So there's a bifurcation. There's Bitcoin and then there's altcoins, and there is real use cases, real utility for some of them. But you're not going to get that deployed until you get that clarity that's required from the government in terms of what the rules are. Because, who's going to spend the kind of money that you need to switch over the financial system if you're not guaranteed that you're going to be able to use it? You certainly don't want to be sued in some kind of regulatory enforcement situation, So that's the dilemma that we're all facing right now.
So we need the Clarity Act to pass before the midterms. If this was like a polymarket odds, like what percent chance do you give the Clarity Act to pass before midterms?
There probably is a poly market on it. I haven't seen it. I could only guess at it. I would say it's got to be north of 50%. Because hear me out, from a political strategist or gamesmanship point of view, Elizabeth Warren has gotten many things wrong, but the most specific thing she's gotten wrong related to our industry is there is no anti-crypto voter. You remember that meme she put out? I'm building an army of anti-crypto people. We're going to attack crypto. Well, it turns out there's no anti-crypto voter. Moreover, there are crypto voters. They took Moreno in Ohio. They gave him $40 million, and he blew Sherrod Brown out of the seat. He was the ranking head of the Senate Banking Committee, decidedly anti-crypto. Bye-bye, Sherrod Brown. So I don't think the Democrats want to be on the wrong side of this, the younger Democrats. If you're 60 or older, you're probably anti-crypto, and you're probably miserable, and you hate Donald Trump. If you're 60 or under, and you're a Democrat, you probably want to be a part of the future, and you don't need the political action committees associated with crypto spending reams of money to defeat you in the upcoming election. So there's a combination of those things that are going on. But here's something that we have to tell your viewers and listeners that they need to understand. Because of gerrymandering, because these politicians are able to slice and dice their districts to benefit themselves or their party, and I'll say this rhetorically, but you'll get it, are we in a real democracy if the politicians are picking the voters? I thought the voters are supposed to pick the politicians. But you're in a situation where we only have 40 districts of the 435 districts that are now considered purple or swing state districts. And so you got to think about it, or swing districts. You know, it's astonishing to me. Most of this stuff, 92% of the districts are set in stone as a result of the gerrymandering. So we have to fix that too. I mean, there's a lot of things we need to fix, by the way, Aaron. You know, we got to fix the money. You know that. We got to fix the rail system for the world of financial assets and tokenization of America's assets. But the big thing for me is we got to fix the political system. We got to make it fair. You know, you have certain states that could have 45% Democrat, and every representative is a Republican. You have this, or vice versa. It could be 45% Republican, and every representative is a Democrat in the state as a result of these games that they're playing with each other. I'm a still believer in the don't fight the Fed approach to market activity. And so the recent inflation numbers and the decision by the president to put a Fed interest rate friendly chair in place. And of course, Jerome Powell is leaving in May of next year. And so the president has the opportunity to do that. I think any one of the picks that he's looking at, any one of those, in my opinion, I think would be setting the country up for 2 to 4 interest rate cuts next year. And so it would be very hard to go against the market. Yes, you could look at metrics and say it looks expensive. In some cases, particularly some of the Mag 7 looks very expensive. But if you're going to cut 100 basis points off of the interest rate cycle, it could steepen the curve, which is a little bit riskier, but I still think the curve's reasonably steep right now. But to me, I don't know. I got that as a buoyant market in 2026. I'll say something that's a little bit cynical, forgive me, but you do have a situation where the president's going to want to win those midterms. So he's going to flood the zone with capital. He's going to drop interest rates. He's going to try to perk up the economy to get people to vote with his team come the midterms. That bodes well for the stock market. I think it bodes well for the altcoin market, and I think it certainly bodes well for crypto, Bitcoin in particular.
Any Bitcoin price prediction with a 1-year outlook? Hey, if we record another interview 1 year from today, what do you think the 2026 high for Bitcoin will be?
Well, I mean, this is my problem. Let me. Can I give it to you from under the desk? Let me hide under the desk while I'm giving it to you, because I have been so wrong about this, you know. And I tell people I'm right directionally, but I've been wrong on timing. I thought we were getting the spot ETF in March of 2022 because we got the futures ETF in November of 21. And if you looked at the laws, that's what should have happened. That's the reason why Gary Gensler actually lost the lawsuit. You know what I mean? And he lost that lawsuit to Grayscale. So it's very hard to predict these things timing wise. But here's what I like going on. Remarkably bearish sentiment going into next year. Up against the backdrop of real rate cuts. So I'm going to stay to my $150,000 price prediction. I'm off by a year, I think, but I don't think I'm going to be off by much more than that. I think we get to 150 next year. Remember, you need a slightly less OG selling, interest rates lower, and the consistency that we are seeing in ETF flows. And I don't think that those flows are going down. If anything, the Wall Street selling machine, Aaron, is just gearing up. And I think we're going to have robust net inflows to those ETFs next year. So 150 shouldn't be out of the question. And I will tell people, because I put my money where my mouth is, in the last month, I bought 4 more Bitcoin for my family. And so I am putting money in at these levels, expecting higher prices.
Beyond the price of Bitcoin, Scaramucci is focused on the S-curve of efficiency. He points out a staggering reality. The global economy spends between $3.5 trillion and $4 trillion every year just on transaction verification. That's the tax we pay for credit card fees, wire fees, administrative legal costs, and banking hurdles. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.